In this video, we're going to talk about the 10 highest dividend-paying stocks you should consider adding to your investment portfolio. So before starting, please like this video and subscribe to this channel for future updates. Dividend stocks routinely distribute a percentage of the company's cash flow to investors, making them a great choice for those seeking income. The finest dividend stocks really increase their payouts as the company and their profitability develop over time. Investors can increase returns by compounding dividends. Stock selection is crucial for dividend investors since, regrettably, dividends are only as good as the firms that pay them. Here are 10 of the highest yielding dividend stocks you can add to your portfolio. Number 1. Lumen Technologies Incorporated, ticker, LUMN. Lumen Technologies is a U.S. telecommunications company that changed its name from CenturyLink in 2020. Lumen is moving to divest some of its assets, and on August 1, 2022, the company completed a $2.7 billion sale of its Latin American operations to Stonepeak. In August 2021, Lumen announced a planned $7.5 billion sale of its traditional telecom business to Apollo Global. Lumen shares are down more than 50% in the past 5 years, but Morningstar analyst Matthew Dolgen says the company has tremendous potential once it completes its divestitures. He says Lumen shares are undervalued, but the stock requires patience. Number 2. Altria Group Incorporated, ticker, MO. Altria is one of the world's largest tobacco companies. Altria Group Incorporated is an American corporation and one of the world's largest producers and marketers of tobacco, cigarettes and related products. It operates worldwide. Morningstar analyst Philip Gorham says Altria is no longer a pure-play cigarette company. Roughly 15% of Gorham's valuation estimate for Altria comes from the company's 10.2% stake in alcohol giant Anheuser-Busch. In addition, the company has acquired both vaping and cannabis assets in recent years, including its stakes in Juul and Cronos Group Incorporated, CRON. Gorham says the U.S. cigarette market is in secular contraction, but it remains attractive for now given its profitability. Number 3. Pioneer Natural Resources Company, ticker, PXD. Pioneer Natural Resources is an oil and gas exploration and production company that operates primarily in the Permian Basin in West Texas. CFRA research analyst Stuart Glickman says Pioneer is increasing Permian production at reasonably low well costs. He says the company's acquisition of Parsley Energy for more than $7 billion in 2021 helps address Pioneer's relatively low reserve life relative to peers. Pioneer is certainly benefiting from soaring oil and gas prices in 2022, but Glickman says inflation in oil services costs will likely become a near-term margin headwind. Number 4. Vornado Realty Trust, ticker, VNO. Vornado Realty Trust is an office real estate investment trust, or REIT, that specializes in redeveloping office towers, retail locations and urban central business district office properties. Morningstar analyst Suryansh Sharma says Vornado and other office real estate owners have been pressured by the remote work environment. Employers are struggling to lure workers back to the office after 2 years of mostly remote work. Sharma says physical business occupancy will continue to slowly improve but may not recover to pre-pandemic levels anytime soon. Still, Sharma says there is significant value in Vornado shares. Number 5. Simon Property Group Incorporated, ticker, SPG. Simon Property Group is another REIT that owns and operates retail malls, along with community and lifestyle centers. Unfortunately, Simon investors haven't gotten the post-pandemic recovery they were hoping for in 2022. The stock is down 32% year-to-date as of August 1, making it the worst performer on this list. Bank of America analyst Jeffrey Spector sees the weakness as a buying opportunity for long-term investors. Fortunately, Spector says Simon's guidance is conservative and it has potential to cultivate organic growth. Number 6. ONEOK Incorporated, ticker, OKE. ONEOK is a midstream U.S. oil and gas company that specializes in processing natural gas liquids. Russian supply cuts recently sent natural gas prices soaring to their highest levels since 2008, which is good news for U.S. gas demand. Glickman says there has been an uptick in well completion work in ONEOK's key operating regions, suggesting a new wave of gas processing demand is just around the corner. Glickman says ONEOK has a runway for cash flow growth, and plant expansions will generate even more volume. Number 7. Devon Energy Corporation, ticker, DVN. Devon Energy is a U.S. oil and gas exploration and production company that has taken advantage of soaring energy prices since Russia invaded Ukraine. Devon stock is up 39.8% in 2022 as of August 1st, making it the top performing stock on this list. In addition to boosting its dividend, excess cash flow helped Devon fund an $865 million buyout of Rimrock Oil and Gas in July. Bank of America analyst Doug Leggate says the Rimrock deal may be a hint that larger acquisitions could be coming. Number 8. Kinder Morgan Incorporated, ticker, KMI. Kinder Morgan is one of the largest U.S. midstream energy companies and focuses primarily on natural gas and liquids. Kinder Morgan transports 40% of U.S. natural gas volumes, 50% of which is intended for export. Glickman says European shortages should support liquid natural gas demand, and the recent spike in oil prices could also boost demand for associated gas processing and logistics. Glickman says the primary concern for Kinder Morgan investors is a U.S. economic downturn. Kinder Morgan also has room for share buybacks in 2022. Number 9. Lamar Advertising, ticker, LAMR. Lamar Advertising NYSE, LAMR, provides billboard advertising along with advertising in bus stops and airports among others. It is exactly the kind of low-profile business model that investors should consider as tech continues to waver, and it comes with a 4.63% dividend. The stock's steady growth has outpaced that of the Nasdaq by 2.69% over the last 10 years. That speaks to the value of its business proposition and to its incredibly long run of success as a firm that's 120 years old. Lamar Advertising saw revenues increase 16.4% in the second quarter, reaching $517.8 million. Meanwhile, net income increased by 12.2% in the same period. That's much better than many digital advertising businesses have done and speaks to the staid nature of the business model. Number 10. AT&T Incorporated, ticker, T. AT&T is a diversified telecommunications, media and technology company. Bank of America analyst David Barden says growing macroeconomic headwinds, cautious management commentary on inflation, expanding consumer payment cycles and accelerating declines in AT&T's business wireline revenues overshadowed what was otherwise solid fundamental performance for AT&T's core businesses in the second quarter. Barden says AT&T has positive subscriber growth momentum, including 1.058 million postpaid net subscriber additions in the quarter. AT&T has also streamlined its business by divesting its Warner Media assets. Even if the market has had a challenging year, owners of these top 10 dividend-paying S&P 500 firms have at least continued to receive their quarterly income checks. Which of these high dividend-paying stocks would you like to add to your investment portfolio? Let us know in the comments below. Thank you for watching and don't forget to subscribe to our channel for more weekly investing videos.